everyone, Dan, Sharpe Trade. As it is Monday, the very first Monday of April 2017, as it is Monday though, we have a Sharpe Income Project entry. We do these Sharpe Income Project entries on Monday, and thus, this video. Somebody had asked, why don't you care whether the stock market goes up or down? Because it's immaterial to my performance. Right? There's a concept known as correlation. Right? How correlated are you to the stock market? What that means is if the stock market goes up and you've got a very tight correlation to the market, I'm explaining this for folks that are new. Why don't I care? Because the Sharpe Income Project is not going to have a very tight correlation once we really get it cruising to the stock market. It will have some effect. The stock market movements have some effect. But when the project's got all the pieces in play and it's just cruising week after week after week, the correlation to the stock market is low. And that's why I don't have to care about whether the stock market goes up or down. It'll have some impact, but just it's not tightly correlated. When something's tightly correlated, that means that, you know, if A moves up $1, then B will move up like 93 cents, right? Those two are tightly correlated. When something has a loose correlation, A may go up $1 and B goes up 53 cents. That said, there's not a tight correlation there, okay? So I build things so that it doesn't have that much of a, I perform well, as you can see in the project, but it won't have that tight of a correlation to the stock market, and thus, I can get good performance, and I don't have to care what the stock market's doing. Who cares, right? Especially that trading segment. You're going to see it have a very low correlation to the stock market as it gets heated up, especially as we approach $10,000. Aight? So, I hope that answers that question. We're going to just mention real briefly, it's going to not be painful. Might take me 20, 30 seconds. Okay, so just sit through it. But many have expressed interest in the promotion that we're running on the premium products. So please remember, we are running a promotion. Sharpe Trade LLC, the marketing folks, are running a promotion on our premium products. There's a lot of free stuff. 3 free educational courses of how to begin with investing and trading, money management for investing and trading, and trading psychology and emotional discipline. But then, as well as this free Sharpe Income Project we're running. But then we have our short-term trading course and our valuation investing course. So we are running an April tax season promotion. Okay, everybody's upset in April because of paying taxes, so the marketing guys were like, throw a promotion, right? Well, everybody's upset about paying taxes, have a promotion on the premium products, which means for the short-term trading course, there will be a, what is it? 30%, near 30% discount, actually a little bit over 30% discount on the short-term trading course. On the valuation investing course, the discount is over 20%. Okay. Then if you purchase both of them together, you pay those prices up front. In other words, the short-term trading course with the over 30% discount, the valuation investing course with the over 20% discount. The prices have been set on the website. It's ready to go. If you do purchase both of them together, what's going to happen as soon as the client services folks see that come in, it's the same person, they issue a refund such that you will have received over a 14% discount on top of the discounts you paid for both courses. Okay? But to get that 14%, you gotta purchase both courses. All right? See, that was painless. That was painless. But for those interested in the promotion, it is on running. Everything's been set up on the website. I heard from the website folks, everything's ready to go. Okay? Now, let's get back to Sharpe Income. Okay? Let's start talking about Sharpe Income. First thing is there's a capital contribution each week. And you can't obviously count that towards the gains. But this week, the capital contribution, again, as we've been saying, is going towards the part that's reserved for cash. And we even sort of segment it a little bit, right? So about 85% of this week's deposit was sent to just cash that we keep on hand for that capital gains segment of the Sharpe Income Project, and about 15% of it went and it was reserved for future deposits towards the income process. Okay, you can find that in the text part of the entry. Yeah, we rocking it. We're rocking it. Still really hoping to get that cash portion beefed up on the project, but we're going pretty good here, folks. What is the point of the project? What's the point? Right? Why are we doing this? We don't show the process, that's true, that's in the courses. But it's to demonstrate how someone with even only $500, $25 a week can grow an account that eventually pays you a nice income. Right? So what's the point? Sharpe income, pay you a nice income. Income, right? So if you notice, since it was the end of the month, we've attached a PDF for March of 2017. The numbers that we compute are March's numbers. This is the end of the month. And as I said, we're kicking it. So the main point is income. And we based it off of an ETF that sort of tracks the price movements and the yield of the 7 to 10 year portion of the bond curve. 10 years is just a vital bond, to sort of know and to understand its movements and its impact and import across all markets. The 10 year is a big one. So we figured let's pick the 7 to 10 year IEF ETF. Right? The ETF's name is IEF, and we picked that one. So we're crushing it as far as just performance of the actual, ETF that tracks the bond. I believe up to this point, IEF has paid 3.67% in income. Right? See, it's always funny to me when I hear from folks, it's like, well, where are you going to get 3 to 5% anymore? Where are you ever going to get that sort of, return, just not return, that's easy enough to do, but where are you going to get that sort of income from? Can't get it from a savings bank anymore. You can only get what, like 1% or something like that? So how in the world are you going to generate a 3 to 5% income? Well, we are. First of all, if you just went out and bought IEF, up to this point you'd have, what did we say, 3.67% return. The Sharpe Income Project, however, not counting the trading segment, this is only the income assets, has generated 3.72%. Okay, in terms of yield. So, I'm sorry, but I still think equities is the place to be for yield. So, equities, we've gotten 3.72% in terms of yield, just dividends paid on your money, and for the cost, and 7 to 10 year ETF or of IEF, only 3.67%. Plus, it's beating the performance of IEF. Actually, if you look at the project itself, the income assets themselves, actually, you know what? We didn't count the dividends that we get from the capital gains segment because that's capital gains. So actually the dividends have been higher, but we're not counting that, right? But anyways, what I was going to say is the income assets themselves are beating the S&P 500 index. So, I mean, as I said earlier, we're rocking it. We're killing it. The income assets themselves are beating the S&P 500 index. We look for value when we purchase them, right? That's in the valuation investing course. So that's beating. As a matter of fact, the project itself, when you put both segments together, which is going to dilute the return a little bit, the S&P 500 index has eked out just a little bit over it in terms of performance. When you consider all performance metrics, total drawdown, just everything together, the S&P 500 index is only just barely eked out over the Sharpe Income Project. And this isn't even for that. This is for income. So, yeah, we're doing quite well. We're doing quite well. So moving forward, it's going to be about cash, right? You'll probably hear in future weeks me saying what I've said this week. We want to get the cash portion and what's reserved to go into each sort of pocket, right? So we have this like big bucket. And we sort of say, okay, this much we're going to set aside for the income assets, this much we're just going to set aside to keep cash on hand, and this much we're just going to set aside to put towards the capital gains segment or the trading segment. You'll probably see that beef up. And it's something that I've said about this project before. We're the processes, we only keep with the folks who've bought the courses. However, keep an eye on the percentages. I will tell you that much. Keep an eye on the percentages. There's something I'm trying to really get in line, get in gear. but I've said too much. So, for now, that's just been the short little Sharpe income project entry we have each week. We're killing it. We're doing well. And for now, that has been what it's always been. It's simply been our thoughts, not yours, for whatever the heck date is. As always, stay safe, trade well, and remember that love doesn't cost a dime.